Hello, and welcome back to the channel. Today, we're going to be doing something different. We aren't going to be talking about a specific stock or ETF, and we aren't going to get technical. I want this to be as simple as possible to make sure everyone understands it. This is mainly for Canadian investors, but does apply across any borders. So before you buy that next US stock or ETF, there's a hidden risk that could eat your profits alive. The US dollar could be sinking your portfolio, and most investors don't even realize it's happening. So let's get into the details. Here's what they don't tell you in investing courses and YouTube videos. When you buy US investments as a Canadian or a foreigner, you're not just betting on stocks. You're also betting on the US dollar staying strong. Look at this. If your US stocks go up by 10%, but if the US dollar drops 10% against your currency, you break even. Zero profits after you took all of the risk. This is exactly what happened to thousands of investors who thought they were winning, only to watch their gains disappear into thin air. Let me show you the reality. Over the past decade, the US dollar has swung from 95 cents Canadian all the way up to $1.20 Canadian. That's a 25% swing that directly impacts your returns. Let's do an example. Sarah and Mike both invested $10,000 in the S&P 500 last year. Sarah bought the regular US ETF, while Mike bought the Canadian hedge version of that same ETF. Now, the S&P 500 gained 8%, but the US dollar fell 5% against the Canadian dollar. So Sarah's return was only 2.6% in Canadian dollars, and Mike's return was 8% in Canadian dollars. Sarah's 8% gain became just 2.6% in Canadian dollars. Mike kept his full 8%. That's the power of currency hedging. Here's how to protect yourself. Currency hedges ETFs are your shield against dollar drops. Most Canadian brokerages offer hedge versions of popular US ETFs. Look for tickers ending in HX, like VTIHX or VFV.HX. These automatically protect you from currency swings. It's simple. Step 1, open your brokerage's app. Step 2, search for the hedge version of your favorite US ETF. Step 3, buy it just like you buy any other stock. That's it. If you want to level up, diversify beyond just hedged ETFs. For example, when oil prices are high, Canadian energy stocks often outperform. European and Asian markets give you exposure beyond the US dollar entirely. All of this is available to you right from your phone. No complex math, derivatives, expensive financial advisors needed for you to do this. Don't let currency risks blindside you. Before your next investment, ask yourself, am I protected if the dollar drops? Now, if this saved you from future losses, smash the subscribe button. And I got more Canadian investing secrets coming your way. Protect your portfolio, invest smarter, and I'll see you in the next episode. Hey, Canadian investors, before you buy the next US stock or ETF, there's a hidden risk that could